Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond and it is 5 a.m. Eastern Standard Time, April the 7th. Let's begin with the E-mini futures, S&P E-mini futures. I went to bed last night, I don't know, around 10:30-ish, and the futures were down by about, at least on the NASDAQ, by about a third. And you could see that overnight we just went ripping up higher here. And at current on the E-minis, we're up, let's call it 2.5%. And it appears as though we may head a bit higher before all is said and done. A little bull flag action here. This is a 15-minute chart. I don't want to get too caught up on a 15-minute chart. I think that what we're seeing set up here on the market is a rally into earnings that may continue for all I know, but for all I know, by 10 a.m. Eastern Standard Time, it could be negative today. This is a market that's built on quicksand, because I'll take you back to a chart I've been referencing, or graph. We are here. Return to normal. You get that feeling, right? Big move yesterday to the upside. Volume, meh. Not wonderful. But certainly a feel for a return to normal. The question is why? Why do we rally like we did yesterday? Well, it's because we may be over the hurdle with the CCP virus. Less new deaths. I mean, it's absolutely ridiculous reason to go rallying, but we did nonetheless. And I think it's because what they want to do, they want to orchestrate a rally in advance of earnings. And you'll probably see some selling in advance of earnings, but you're going to have the big banks out next week. And I'm not looking forward to what they have to say, nor am I looking forward to the economic data that's coming out later this week. Yet we are ripping up into it. And we have the weekly jobless claims coming out on Wednesday, I believe. Thursday. Let's take a look at the NASDAQ. They're up 2.26%. And I had an alert that fired off right before I went to bed. Where was that? We had made a new lower low. Yeah, we shrugged that right off. And we proceeded up high here, right here. We broke to a lower low and still moved higher. Now, what I will point out here, and this is only a 5-minute chart, so very volatile. I'm just trying to illustrate a point here. Lower highs on RSI, lower lows. So again, I would be the least bit surprised to see this market seeing some selling pressure later on this morning. Now, we did lean into the short side at the close yesterday. Would I go shorting more this morning? I don't know. I think that right now what I'd be looking for is, rather than shorting into weakness, which is what we've already done, is wait for that bullish reversal day, that day that tells us, you know what, we were up and now we are down on the day. And what that does is completely hits confidence. Let's bring up a chart of what a bullish reversal bar is for the benefit of those people not familiar. Here is a bullish reversal bar. We were down to close up. Another one here. And my apologies. I meant to say a bearish reversal bar. That's what we'll be looking for. Like here. We were up to close down. It's a little bit early. I haven't had my second cup of coffee yet. What else? Where's another one? Here. We were up only to close down. So people got all excited on the 3rd of March on a continuation move higher. What happened? Bearish reversal day. Next day, they rallied it. Following day, no follow through and broke down. I don't think we're going to see the same thing because this was the early stage of the sell-off. And we have broken out here on a daily chart. But be very, very careful. To both sides, shorting this market or getting long. At this point in time, at this juncture, given the price action that we've seen, I think that it's more prudent to wait for the markets to say, you know what, okay, head fake, and we got you. Wait for the market to reverse. So we're consolidating here this morning on the NASDAQ. It appears as though we're probably going to head up a bit higher. Now, taking a look at currencies, the dollar is beginning, back to a 4-hour chart, beginning to break down in earnest. Possible lower high. The dollar isn't broken. Let's clean this up. Okay, better. The dollar isn't broken until we begin to break down to new lower lows. And we're not there yet. And here's our lower low. All right. So we'll probably come down here, retest this lower band of support. What's going to do well on a dollar break? You guessed it. Gold. Gold went on a tear yesterday. That being said, it pulled back well off the highs. We were as high as 1742 overnight. Think about that. A high of 1742.6 on gold at current. We're at 1704.8. So, you know, great to see gold up. We're long of the gold miners. We're long of silver. But this price action was a bit concerning. Maybe some profit taking overnight. But gold is on a tear, folks. And it's not just gold. What we're seeing across the board, silver up 3.5%. And it looks as though we're going higher. So if you're looking for a bull market, that's in the nascent stages, the early stages. I mean, look no further than silver, gold, the commodity spectrum. Platinum up 2.3% and going higher. We're breaking out this morning. Palladium. Inverted head and shoulder setup, left shoulder, head, right shoulder. Let's clean this up. We're beginning to break out here. But what we need is a continuation move higher. And you could trade a name like PALL to the long side. That's an ETF if you want to get long of palladium. Looking good here. So again, here's the inverted head and shoulders setup. Left shoulder, head, right shoulder. There's your neckline. Flirting with a breakout. So the metals, in fuego. I mean, even copper. I was looking at copper overnight. This is what I do. Copper. Where is it? Here we go. Copper. Of all metals, think about it. Copper on a tear, up 3.7% this morning. Good morning, Roy. Funky Bear. Love the name. Welcome aboard. Good morning, everyone. And if I could ask you to smash that like button, I'd really appreciate it. Thank you very much. So, nice base here. I mean, really nice. Copper. Think about this. Copper on a tear. Industrial metal. This is on hope that the global economy is going to get started again. And it's probably why you're seeing silver catch a bid as it is at current. Because silver is not only a precious metal, but like copper, it's an industrial metal. Let's check out. I want to check out food prices because we are eyeballing inflation. Oats, not much happening here. Building a base with soybeans. Soybeans beginning to break out here. Not that I trade soybeans, but I'm watching for signs of inflation. You can see what we did overnight here is that we broke out of a base. Okay, so we broke out, and it's not overnight, late Monday. We broke out, pulled back, retested once, twice. We're probably going to follow through to the upside this morning. Where's wheat? Maybe corn. Here's wheat. Wheat, very volatile. Let's go to a weekly chart here. All right, so we broke out. Let's clean this up. We broke out. Let's do it this way. Okay, that's better. We broke out, pulled back, retested. This week, we're seeing a little bit of weakness, breaking down below the lower band of support here. But I'm not going to be the least bit surprised to see a reversal on wheat. But I wouldn't bet on it. You don't bet on reversals until they happen. All right, so warning flag on the track for wheat. Back to the 4-hour chart. I want to see if I can bring up corn here. And we're looking for inflation, folks. This is the only purpose. I'm not looking to trade food or ag names per se. I'm eyeballing inflation because we are long again of silver, the gold miners. And once you start seeing inflation rear its head, you're going to see those names go. There's corn. We're basing here, not much happening. We've had attempted breakouts like this W formation here, which failed. So not much happening. So nothing of major concern. Nat gas this morning on a tear. So commodities looking very, very good. Let's take a look at oil. Where is my light sweet crude? Here we go. Up about 3.5% this morning on light sweet crude. It's about time. So that's good. I'm going to leave off here with the bond market. And we are under a bit of pressure. We're just normalizing here. I mean, the yield is still very weak historically, but we're coming under pressure. It just shows that we're seeing a little bit of normalization. And one article I want to bring up here, and I haven't seen an article like this in a really long time. It kind of spun my head. You're seeing some really serious paper being written in the junk bond market. This is Morton's. Morton's is a high-end steakhouse. It's a chain. And Morton's parent scrambles to reopen frozen loan market with record yielding 15% secured paper. Think about that. 15% secured paper. Other articles out there. I haven't dug into this one yet, but pretty interesting. COVID-19 has lit a fuse under China's economic debt bomb. They're trying to paint a happy face over there, but their problems have only just begun with what they've done. And if you want to look for another reason why, we're going to see another leg higher here with commodities, in particular precious metals. Pelosi tells Democrats the next stimulus bill to be at least $1 trillion. And guess what? She's not wrong. They're going to go for it. They're going to blow up this balance sheet like you've never seen before. So stay tuned. Let's take a few chart requests. I want to bring up SPCE. Which a couple of buddies of mine are long of. And we went over this over the weekend on Sunday Night Stock Charts Live. And we did break down last week. This is a weekly chart. We broke down below support last week. This week, we're trying to recapture prior support. So I'd be careful here with resistance right above at around $14.83 to $15 per share, give or take a dime or so. Now, while I was a bit gloomy on the weekly chart, I was happy about the daily chart and expressed optimism that we would get a move higher, which we did. We moved up higher yesterday. RSI broke out. We were looking for that breakout. Now we're looking for a pullback and a retest on RSI. So SPCE Continues to look good, but I will warn, in the back of your mind, if you're long of this stock, just keep an eye. This upper band of resistance here, this prior lower band of support, is a bit concerning. So beware of the macro view, the weekly view versus the daily view. Let's take a look at a 4-hour chart. 4-hour chart looking pretty good. So we should see a continuation move higher here on Virgin Galactic. Let's take a look at ISNG. Okay. Another nice move here. We spoke about this one over the weekend as well. And overlaid here, this is a 4-hour chart. Let's go to a daily chart. Overlaid here in dashed line. With TrendSpider, you could overlay weekly resistance or support over a daily time frame. And we set this alert up and we broke through resistance yesterday and recaptured monthly support. So INSG is looking very good on a daily basis. Here's a weekly view. It looks like we're probably going to rally up to 8.49 per share on INSG. So these shares looking very, very good this morning, especially in light of the markets being up higher this morning. Let's bring up the semiconductor sector. This is the SMH. Monthly view. We remain in a downtrend, a descending wedge formation. We're flirting with that upper band of resistance at current on a monthly basis. Weekly view. We have broken out above a resistance level, at least as we appear at current. This is Tuesday. We still have 4 trading days left to go in the week. The question is, do we close above this resistance level on the SMH? If we do, next week expect a retest and then a rally up to these upper bands of resistance. So some potential for additional upside here on the semiconductor sector, assuming that we close out the week pretty strong. Daily view. We're going to see some resistance right here. 126.90, right where these topping tails are. Right here. And topping tails on top of your candlesticks imply you have sellers above. Higher lows on RSI. Higher lows on Stokes. So a strong chart, at least in the short term. But the thing that we really need to do is we're going into each trading day now, because with each trading day, our risk really gets more and more elevated. And I'm going to go back to this. I'm going to keep going back to this. Are we getting that feeling that we're returning to normal? Do we believe that next week when earnings come out, they will be better than expected? Traditionally strong? or will they reflect the economic realities that we would expect to see when you have an economy that has, for all intents and purposes, been closed for the past 30 odd days? So just be really careful here, folks, as you proceed into the remainder of this week, because we saw over a 5% move yesterday on the NASDAQ, on the S&P. We're up nearly in the pre-market, flirting with another 3%, an 8% move on the S&P 500 within 2 trading days, and the economy is closed. Does that make sense? So please, let's think about the economic realities of what is in front of us. You know, it's great. We all want the CCP virus, the Communist Chinese virus, to be over and done with. We want to be over that hump. And I'm sure that everybody's going to be pleased to come out and go back out to restaurants. I'm not one of these believers that nobody's going to go to restaurants anymore. Believe me, I'll be one of the first to go out to a restaurant and have a nice steak or whatever. But, you know, the reality is that we have a ton of economic damage that's been done here. And to ignore that we're not going to just simply tiptoe around this is insane. And what I also want to point out is where we're at, and I promise to do this. I want to keep doing it. Where are we in terms of price? PE historical. In red, here's the magnified view, overvalued. This is for Q4 of 2019 and not reflective of current PE for Q1 2020. In blue, fair value. That's way down here. That's a 2092.05 on the S&P 500. We're up here. Undervalued, way down here. So we're far more closer to being overvalued using the PE ratio for last quarter, not this one. This does not reflect the damage that's been done to earnings. So think about this before you go overweighting stocks today, folks. And with that, I'm going to say everybody have a very profitable. Hey, Trent, good morning. I think the U.S. dollar really looks like it's about to launch. It could, Trent. I mean, you know, I'm looking at a 4-hour chart, but to your point, it's a fair point when you take a look at the U.S. dollar. Monthly basis. We broke out last month. We're back up and into resistance. So I'm not going to be a naysayer here so the dollar can't move up higher. It certainly can. But as of this morning, and remember where we're at on a weekly basis, right? We're right up into resistance. So that's right up here. So we have a lower high, no breakdown yet. For all I know, by the end of business today, we could be back above this upper band of resistance. So to your point, sure, the dollar can move up higher. And with that, folks, I'm going to say everybody have a profitable trading day. If you haven't hit that like button, subscribe button, please do so. And please, everybody be safe, and I will talk to you soon.